Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, just a quick update for you guys today. We're only going to be looking at Bitcoin again. Nothing's really changed since our opinion last week. We're just going to go through the chart, pick away at a few details, and then I'm going to be leaving you guys for a while because I'm going on holiday to visit some family over Christmas. Unfortunately, the first part of that holiday got cancelled, and that's why this video I've been able to do it. Unfortunately, due to viral restraints, let's put it like that. And I've had to shift that to the end of the holiday now, so I won't actually be back until the 29th. So I'm going to leave this last Bitcoin update with you, do some projections, look at what I think is going to happen, and what our expectations are, potential areas for support, all that kind of stuff, and then we're just going to wrap things up, and I'll see you after Christmas. So, before we begin, a quick word about the great benefits of becoming a member of the Green Star Trading Patreon. Now, let's say you already appreciate the work I'm doing on YouTube and you want to show your support. Then for just £5 a month, that would be greatly appreciated, plus you still bag yourself an exclusive video each week that won't be available on YouTube. Or next, you could become a dedicated patron at Tier 2 for £10 a month. This will get you the same exclusive video from Tier 1, but you will also get access to the Discord, where there are multiple channels in which you can engage and communicate multiple ideas and thoughts with the rest of the community, including myself. This will also give you access to weekly live analysis sessions via the audio channel on the Discord, where I use screen share to share my live analysis, where I am happy to have live discussions and talks about anybody's ideas. You also get access to all previous educational content available on the Patreon, which is also posted on the Discord, and all future educational videos that will be released. Finally, you also get early access to all future YouTube videos. And finally, devoted Patreon Tier 3 for £15 a month. You get all of the benefits from Tier 1 and Tier 2 as previously mentioned, but you also get access to my proprietary stock rating system and my monthly dividend calendar. These are released at the start of each month, and they are my stock picks for the month, and each stock is rated out of 30 based on value, company health and dividend. This is for the value investors out there that are not just traders. I myself have always been an investor as well as a trader, and I like to take up long positions in stocks and invest in companies for the long term. So if this is interesting to you, this might be right up your alley. Also, if there is a particular stock you're interested in and you want me to apply my rating system to it, please mention it in the Discord and I'll happily come back to you with a result. Also, if you're struggling to look up the ex-dividend dates for any stocks you may be interested in, please let me know and I'll do that service for you as well. Alright guys, thank you very much for listening, and now let's get back to the video. Okay, welcome back guys. Right, so last week we left off essentially having, from the week prior to that one, adopted the bearish count as our main count. I explained a couple of weeks ago how after this idea of the 1-2 broke down and we broke this level and we've done all this, it just wasn't feasible to look at this as an extension anymore. There is still a bullish alternative that we could look at this as 5 into a 1 and we're going some kind of A, B, C into a 2. But that's the alternate really. I just want to focus on what is now the primary, which is this bearish interpretation, which we've had on the board ever since we bottomed down here back in June, and we saw how short this retracement was. We had this as a three-way swing into a potential completed 4, but we always had this labelled potentially as an A, looking for a B, which seems to have finally arrived, and now we're coming down in a C. So we've had our target box projected down here for the bearish count for quite a long time, based off of the length of A projected from the B, and looking for the extensions in a potential expanded flat between the 123.6 and the 131.8. Not looking for the 161.8 here, as we did not hit any of the expansive targets we'd expect to hit on the B wave to higher highs. It was only really just a higher high. There's always the potential of a running flat playing out, but there doesn't appear to be the completed 5-wave structure. So what I want to do is I just want to point out some of the technical analysis here on the chart, which has basically been in play this whole time and is affecting price as we speak. So quite a while ago when we were talking about previous support and resistance, when we were coming up through this rally, we were talking about how this level here proves support. We pointed out at the time this is a 250-day exponential moving average on the daily time frame, but it also coincided with these highs here, and it also coincided, with this high back here and these lows here, and we had this basically line running across the chart. Now, what we'll notice is in our first push down after taking out this support here, which was this previous high. If you remember, for a while we had a count which was the idea that this was 1, 2, 3, 4, and we had an invalidation point across the top of this high that got taken out. So once we took out this level here, which was a previous high, we had a quick flush down, but we didn't just flush down into the middle of nowhere. We came straight back to major structural support. So if we just throw up this horizontal line here, you can see, taking in what I just mentioned, the previous highs and lows, major market support here, previous resistance becoming support, resistance, resistance, resistance became support, has once again acted as support. This wick down came straight to it, and since then we've had a bounce up and we've been drifting back down. There is a, I wouldn't say bias, but there is a bullish view out there to some degree at the moment that this is a 1 and a 2. I don't really subscribe to that, but my only gripe with it is a structural one, as I can't seem to pick out an impulse in here. The move off the low was just so quick inside of this wick, but you can't really find a 5-wave structure. But if we were to come down to here and then bounce out of this channel and we got an impulsive move out of here, then we'd be looking for 1-to-1 targets on an A, B, C correction, potentially into a greater wave 2 that hasn't occurred yet, because we'd be overlapping, so it wouldn't be a wave 4. It could also be the A into the B for the bullish case. Either way, if we went through that 1-to-1 and continued to impulse higher and volume came in to support the rally, then the possibility that this was a 1-2 off of this major structural support is a probability, and becomes more likely at that point. I think it was just a temporary stop, a temporary stopgap before we push down lower to complete this long-term C. So let's point to some other structural points of interest as well. So we've got a long-term support here which has been in play, and now what we're going to do is we're just going to pop the chart into log for a moment and come back up into these highs, just point out a few other things of interest. So if we take an extension of the A and project it from the B, we realize that we didn't just get an interesting target based on structural support. If we take a trend-based fib extension here and we take the length of this move down here, this would be our A. From our B, we find that the 61.8% in log overlaps perfectly with all this prior support and resistance. So that's where we wick to. We've just been holding here. This gives us our projected targets down here. These are the boxes based off of arithmetic targets, but if you wanted to shift it down to the log targets, we could do that as well. We could say, well, maybe we'll come somewhere in between the 100%, the 123.6 and the 131.8 and the 161.8. The 161.8 would bring us all the way down to 18,277 based off of that, which would be quite a significant, well, very significant drop from here, of course. We can look at that and see how it lines up with long-term geometry as well, see if there's still support for that argument. I wouldn't expect quite such a big collapse. As I said, if we're calling this a flat and we only just peaked ourselves above the start of the A with this ever so slightly expansive B wave, a full flush down I wouldn't really expect to see. Just a retest of the lows or slightly beyond, I think, is probably more likely the case. Likely to find that low sometime early 2022, so maybe into mid to late Jan, maybe out into February, depends how deep we want to come down here. So that's our fib extensions there, so let's just get rid of that for the moment. Right, so now I just want to bring up this fixed range volume profile as well. Now all I'm looking at here is I've taken into account as much structure across this whole top here that we've been in. So I felt that, ignoring this fast run up here, which hasn't really contributed to the profile, we've got this corrective element here, this corrective element here, this corrective element here, this here, and then this small topping area here, obviously. So I've taken everything from what I was labelling the intermediate wave 3 high and projected forward for this fixed volume profile. We can see that the greatest area of volume and our point of control is right here. So potential stopping point for a wave 3, or a potential stopping point for a running flat in the fifth of 1, 2, 3, 4, 5 down in the C. But we would have to we would like to see clear impulsive structure down here, and at the moment it's still a bit of a pig working our way through here, especially since the recent move down here doesn't appear to have very good, what's the word, symmetry with inside a smaller wave here. It seems to be the whole structure sometimes looks a bit corrective, and that's got me considering another alternative, which is a very, very bit of a stretch, really, to be absolutely honest, as we can't prove it or observe it until it develops further. So in the meantime, this is still my preferred count. We're just going to work our way down through here. If we break out of this channel and start moving violently higher and we get support, then we can consider the possibility of having pulling a 1-2 off of this structural support and that Fibonacci extension. And then if we look at the long-term picture and we just bring up our long-term pitchfork here for primary 1-2 pivot, we can see how the target box gives us quite a pretty broad area, really, where we've got the 38.2 is still out ahead of us here. Remember, we shifted this into log targets. We don't have to come down this low on the arithmetic scale. We've got the 50 here, 61.8 here, and then we can push all the way potentially down to the edge of the pitchfork, depending on how long it takes. Anywhere, obviously it's a rising target because of the angle, but we could potentially thrust our way all the way down here and find support on the edge of the pitchfork. We could find it sooner. It depends how quickly, once again, we come down here. That's the long-term primary pitchfork there. If we look at the corrective pitchfork at the moment, so we're just taking the swing A to swing B. So we can see how, if we're going to seek out the median line of this pivot here, and we're going to work our way down something like this, okay, that would bring us to new lows. Now, depending on when we do it, you see how long it takes to get down here, consolidatory moves, so on and so forth. We can find support at this median line and keep potentially moving lower. But we would like to see, preferably, stay within the overall 1-2 wave pivot. So if I just bring that up. So we intersect here with the extreme outer bound, not the extreme outer bound, the outer bound of the primary 1-2 pitchfork, and that also coincides with the median line of this AB pivot here. So maybe we just got to take the time to work our way down to here. That pushes us further out into March if we were to test these levels here. That would still bring us to new lows. That would bring us into our target box. So for the meantime, I think we just have to lean into the idea that we're going to continue lower. I mean, until we see something to the contrary, and I'm always open-minded enough that if we do see something to the contrary, we can start to reconsider. But in the meantime, trend is down, so we should continue to assume that it's going to stay that way until it changes. I don't think there's much else to look at here in the short term. Let's have a quick look at the bullish alternate then. So this is the idea that we got a wave 1, 2, 3, 4, 5 into a 1, and that this is 1, 2, 3, 4, 5 A, B, and this will be 1, 2, 3, 4, 5 C into a 2 eventually. And that could that means that we don't have to necessarily make new lows. We could find support maybe around the point of control. We could also find support if we're treating this as a wave 1. We should look at it as a Fibonacci retracement here for a wave 2. So we'll select our wave 2 and see that we get the 78.6 is right on the point of control. So there is still possibilities here. Let's just see how that lines up with our other geometry. So delete these brush strokes. So we've got the 78.6 here around this point of control based on all this structure here. So we're going to find it somewhere in amongst this mess. And let's have a look at how that interacts with the primary. That gives us a 50 if we were to come down straight away. If you come down later, It gives you the 61 at the edge of this pitchfork as well, because we don't know what this is going to be. This could still be some kind of free wave move before a final flush down. We've got the 61 and the 78.6 crossing over here, the 50s here. So maybe we could find support sooner, and we would have to, if order for this to be a legal 1-2, we can't take out these lows. So it depends where you're getting your ABC, doesn't it? I mean, if we're saying A, B, then we can project 1-to-1. I think I'm being a little optimistic with that. We've already gone through it, you see. So is this the A down here? And now we're going to work into that free wave B. I mean, that's something I mentioned earlier, which is if we break that downward channel, you could consider that possibly a B wave, right? So let's just consider this for a moment, since we're looking at it. So I think we'd have to put the 5 down here. We came back to structural support to complete the A in that circumstance. 1-2, there's a 3-4 in here, but we didn't get to observe it on this time frame. It just happened too quickly. So we come down here in an A, we then get a free wave swing into a B, and then we get a move down into the C, right? But we'd have to finish prior to the previous lows back here, back in June. So since everything looks corrective to me off of here, doesn't look impulsive, it could be a free wave move into a B. Like I said, if you break this downward trend and you come out in free waves, you've got to observe how you're coming out of here, momentum wise and volume. Do we get a clear impulse? Do we go 1-to-1 or do we go higher? If we go 1-to-1 on weak volume, then it's likely that it's a B. And then we can project down for a C, maybe around this point of control, maybe around that 78.6, which overlaps. So the bearish case is not dead by any stretch of the imagination. I just think we're moving downwards. We've had what appears, whether we count it as WXY or whether we count it as ABC, it doesn't really matter. We've had free, so it's an easier count to get this as free, and therefore it's an easier assumption, probability, to assume that this will be 5 of some sort down here in the C. But for as long as these lows remain intact, then and if we do break out into some kind of free wave B wave, then this is going to have to be reconsidered again. We'll reweight it and consider the probability, because I would not expect, if we were going to continue to trend down in 5 waves in a C, I would not expect such a big break higher, because it undoes all these highs and lows and therefore robs any C wave of a clear 5 wave impulsive structure. If we were to come back and do that, that kind of undermines all of this at that point. So, as I pointed out in the previous video, until we break the downward channel, okay, until we break this, we have to assume we're going to stay trending downwards. If we break it and we undermine these lows and these highs back here, we can consider the ABC into a 2, or we can even consider some kind of running flat at major structural support, and then this is 1, 2, 3, 4, 5, but we would expect to see more than a 1-to-1 relationship in the acceleration of what would be the 3rd wave, and we would expect to see volume come in to support it as well. So that's really all I've got to say, apart from this final idea that I wanted to discuss. Let's tell you what, let's just bring up our momentum indicators as well here. So very weak action here on the MACD. Right, we've got a buy signal, but we don't have impulsive move in price action, and we've got very weak momentum here. Temporary corrective feel to it, this has. If this suddenly accelerates and we see an increase here in the histogram on the MACD and things look more aggressive, maybe we can reconsider, but this is pretty weak action at the moment, not really showing any impulsive sign or conviction to the upside at all. RSI has been drifting off of oversold conditions, but once again that appears more of a cooling off. We got no bullish divergence at the bottom here, and we seem to just be calling off this bearish move. So potential that it will form into a B wave and then break lower, but it's also possible that we're just calling off from oversold so we can have one final thrust, big thrust down, you know, to finish off at 3. Then maybe through the 4th and the 5th we could pick up some kind of bullish divergence out into January, maybe into February, but all of that's yet to be seen. So, and the volume, if we take a look has been telling us the same story for a long time, which is none of this B wave rally was supported, not like all of this we saw back here during this big wave 3 up. We did have the spike here at the low, which is the crescendo of the selling, which was followed by a divergent low here in the volume that was supported also in the RSI and the MACD, and then we had this rally on very low volume, right? And the fact that volume hasn't increased to the downside discounts for me, not completely, but definitely downgrades the idea that this was a big 5 up here and that we're impulsing violently down. None of that appears to be supported. Everything appears to be corrective, declining volume from the top through the A, B and C waves. Right, so all of this seems to be leaning into the idea that the whole thing's corrective, and any impulsive move higher should start to see the return of volume coming in to support it. Okay, so that's that. Now let's have a quick look then at this final idea, and we discussed this momentarily in our live session on Thursday. It came up at the end of the video, and it's just the idea that all of this is a triangle, a running triangle in this case. Now this is a kind of a bit of a useless pattern really, because you got an A and a B, but that's all you've got so far. So you've got 2 3s, so it's far easier to assume 3 3 5 than it is to assume 3 3 3 3 3, right? It's just a lot easier to carry on assuming the simpler patterns first, which is what I think we should always do. So, but if we were to bounce off of this structural support, right, then that 3 wave move into a potential B could just be a 3 wave move into a D. And if we find a downward trend line here and we reverse again, right, taking out these lows, taking out these highs, coming back to take out the highs here and the lows here, then there's too much overlapping to convince us that this is an impulse. So we come back again in another 3 waves, right, and then if you came out of here, there's your potential E out into March, longer pattern. But this is going to stay very much on the back burner, because until we see something out, right, then this lower trend line could be anywhere. It could be here, it could be here, it could be here, if it exists at all. Right, I've only put it here temporarily because we've got this strong structural support from all this previous resistance and support. So maybe this could be our C wave, and that this explains why this is such a mess and seems to resemble 3 waves more than 5 so far. So maybe it was 3 waves. Maybe it's some kind of horrible complex C wave in a triangle can sometimes take the form of a double or triple combination, or even another triangle. You know, but that's more likely to occur here in the D wave. But either way, from the C wave, D wave, E wave, these can all be complex waves. Only one of them can be out of all of them, but any one of them could appear as a complex wave. So who knows? Anyway, that is basically all I've got to share with you today. So we're going to walk away here with the bearish count as our primary, expecting things to continue to break down impulsively to the downside until it finds support. My bet would be probably testing the lows, if not breaking them by some small margin, would probably be the requirement to find some kind of long-term geometry support from our pitchfork and from fib levels. Okay, we don't have to come down that low, but that's the way I'm going to lean in the meantime. If for whatever reason we do come out of this downward trend, then we've got the A into B into C option for the alternate bullish count going into a 3, but we've also got the triangle. Okay, can't consider either until we do something different from what's expected. In the meantime, we seem to be heading lower, so let's just stick with that, guys. Alright, thank you for joining me on this technical analysis of Bitcoin. I hope it's been helpful. Not much to talk about the last couple of weeks. We've just been doing the same thing, going over the same ground. I just thought I'd point out some of the longer term support we've seen here on the chart. And before I go, I'd like to thank all of my patrons for your great support. I want to wish you all a very Merry Christmas, as I am going to be very busy the next week or two away, so I probably will not be able to update you as frequently as possible. I will keep updating charts from my laptop when I find time. Your support is greatly appreciated, so Merry Christmas to all of you. If you're new to the channel and you like what you're seeing, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave a comment in the comment section below, and if you are interested in becoming a patron of Green Star Trading, then head over to the Patreon following the link in the description below. Have a read of the tiers, see if you're interested in anything. You'll get access to all of our previous educational videos, our weekly exclusives, our live sessions are all recorded and put out as well, and a whole bunch of other stuff. And if you're not following me on Twitter yet, there is a link in the description box below, just in case you're not getting your YouTube notifications that I post new video releases on Twitter as well. Alright guys, thank you very much for joining me. Take care, have a wonderful Christmas, and I will be back with you as soon as I can. All the best. Bye bye.